Hey everyone, today I'm going to talk about how to read level 2 on TD Ameritrade Thinkorswim platform. Very straightforward. If you trade stocks and you are into scalping, if you like to take short-term trades, 1 minute, or just looking for an entry, the best way I have found to get into a trade is by looking at the level 2, looking where the bids and the asks are at, and seeing the behavior of the price action. All that means is you're just looking how fast the price is moving up, how fast the price is moving down, and where can you see that the price stays stagnant. Those spots where it stays stagnant, that's what you call the support or the resistance. For the most part, you will see resistance or supports or places where the stock price will stay at a certain level when it's at around the $0.50 or the whole dollar marks, and also sometimes even the $0.25 prices. So for instance, let's say a stock is at 9.50, you will see the stock either wanting to go up, climb up, instead of like 10 cents to like 960, 965, it will come back down to close to 950, and you will see that price moving up and down, up and down. Just keep your eyes on the bid and ask. Are the bid and ask like not too far away from each other? For when I'm going long, I like to look at the bid price. So that will be my lower end where I'm looking to see how much people are bidding. If the bid is above like the $0.50 or the whole dollar, that means it's kind of like being supported and people are probably wanting to be bullish and they want the price to go up. If I see that the bid is kind of like just weak on those levels, then I see that maybe people are just letting off from the stock and it will become a bearish play. On the downside, I look at the ask price and see what people are asking for it. If people are asking less for it, then that means it's going to become a bearish play. So if you're doing penny stocks, it's more important because it's shorter term, it happens faster, and it happens in the first 30 minutes of the open of the market. You will see that prices move a lot crazier, and you will need to pay attention to the level 2 to see where people are waiting to strike. I don't really pay attention too much to how much size there is on a given price, even though that is an important factor, and it tells you, maybe there's a big player there's gonna be somebody that's going to be buying, but it could also be a spoof where somebody puts a fake order and it tricks you into thinking that somebody's going to buy or somebody's going to sell. I like to pay attention more to what's going on in the actual price, in the direction it's going, and how it's behaving. When I'm in a position with the penny stocks, I don't trade big size, I just trade small size, and so far not profitable yet, but I'm getting better. And of course, there's so many things that you could be looking at, but right now I just want to focus on level 2. The main takeaway from level 2 and from this video is that you look at level 2 as a way to see how to exit a play, or when to exit a play and when to enter a play. So suppose you see the price hitting a specific spot that you want to get in at, you will pay attention to the level 2 at that specific price level, whatever it is for you, and then you gauge how it's behaving around that price. If you see that the price is supporting and it is moving slightly higher and higher, that means it's gonna be a bullish play. Of course, there's other things that you want to be paying attention, but again, it is very important to have your eyes focused on the bid and ask, the price moving like crazy, and then that will give you an idea in a sense, and then you will train your brain, you will train yourself how the price behaves around that level, and it will let you decide whether you want to stick with your position or get out of your position. And then for penny stocks, I like to look at movements that are like 10 cents or in an increment of 10 cents. Let's say the support is $5. The stock is about to hit the $5 mark. I want to see how it's behaving around the 5. Maybe it will dip 10 cents below 5. But then if it will react back to 5 and up, I'm very confident that's probably going to be a bullish play. If it hits 5, it stays at 5, it will probably go a little bit up, and then it comes back down, and it just goes to 90, $4.90, and then it dips below 4.90. It's just telling me that people are not there to buy it up. I'm mostly a long trader because I have a cash account. So that's how I use level 2. I often forget to use it, but it's very important to identify an entry and to see that your entry works. So when I get in, I pay attention. I'm like, is it working? Is it working? And then if I see that people are coming in, are bumping the price up, it's like good. And then I see increments. Okay, I will take some off in the next 10-cent increments, take another half off on another 10-cent increment, or keep the position. And if I see a huge move to, let's say, from 5 to 550, and the 550 is the next spot, once it hits 550, I look, does the 550 hold? Does 550 hold? If it doesn't, get out. If it passes 550 and it bounces off 550, I'm just paying attention, focusing on the momentum, the movement, and the volume, but at the same time the price is telling me a lot about what's going on, and if it continues higher, it's continuing to be bullish. That's pretty much it, all I have. I'm not a professional yet. I want to be straightforward with y'all. I'm still learning, but that's what I'm noticing from the level 2 when it comes to trading stocks. And I'll see you all on the next video. If you like these ideas, if you trade stocks, this might come in handy. So I'll see you on the next video. Bye bye.